What's up, guys? Welcome back to the channel. Welcome back here to the headquarters, the crypto unhyped headquarters, where right now we got major data dropping in the US. The PPI and core and retail sales data are dropping right now. And what we want to see on those readings is lower than expected numbers. I'll get into the details in a second, but I see the data just dropped right now. So let's get straight into it. We can see it here from investing.com on the economic calendar right now. The retail sales month on month, this is of course the late data from September, so don't get too excited. We know that the Bureau of Labor and Statistics has officially canceled the data for October. But now we have a reading here. Actual numbers are coming on lower than expected. This is very good for us, guys. We want these numbers to be lower than expected. Retail sales, if they're dropping, if the economy is not performing as strong, that puts pressure on the Fed to cut rates. We see that the odds for rate cuts until this point right now have been 83% on Polymarket. Same thing here for PPI. This is data also from September, of course. That actually is exactly as forecasted. But the good thing is that the retail sales data is coming out weaker than expected. So that's a very good sign here for the economy, but that's not the data that we're really interested in seeing today. Of course, this is the late data, so outdated stuff that really is not important for us right now. We want to see what's going on with the economy right now after the government shutdown. And there's key data coming out today after this here, so don't expect a huge price reaction from this. We'll get into the charts for Bitcoin in a second, but we have more data coming out. We have consumer confidence coming out today, and this is the November data, so actual data. Here we want the same thing as well. We want a lower or as projected numbers. If it comes in hotter than expected, that means consumer confidence is high, and traditionally that means that the US consumer is more likely to invest in the US dollar and so on, and not as much in risk assets. Historically, there has been a negative correlation between Bitcoin and consumer confidence. Then, of course, we have the 5-year note auction today. Yesterday, we had the 2-year note auction. Of course, those numbers came out lower as well, which is very good. That's a sign that the demand was there to buy these notes at lower rates, right? That usually signalizes that the confidence is there that rates will get dropped, that we will see a better monetary policy. Now, if we get the same thing here for the 5-year note auction, and tomorrow we have the 7-year note auction, then of course that's very bullish for the market and a strong outlook that we will look at rate cuts in the next month in December, on December 10th, when the FOMC decision will take place. So very good. Keep your eyes out for this. The data is dropping. I think this is Central European time here. So the data is dropping at 10 a.m. No, this must be Eastern time. Yeah, 10 a.m. Eastern time. So 4 o'clock Central European time and 1 p.m. So that would be 7 p.m. Central European time. Very important data coming out. And of course, tomorrow is the last day where we get some really interesting data, and already covered everything for this week in the brand new data sheet, which is now available for you guys to download. You have it here in the chat. You have it down in the description, all across my social media. All you got to do is drop your email, and then you get the new data sheet automatically sent to your inbox completely for free every week. And there you can always see the key macro events that I'm watching, that are important, that are catalysts for the Bitcoin price, and everything else as far as you see on-chain data, key levels for Bitcoin, the average performance in the current month for Bitcoin, and so on. Just go down there, download it, take your time, read through it. There's some really interesting stuff. So here you can see all the events. And then tomorrow we, of course, have the GDP annualized, the second estimate coming out, and the core PCE index, often a stronger catalyst for the price and a stronger even inflation gauge for the Fed. So we will have to look at these numbers tomorrow. And then of course there's a huge potential that liquidity will be extracted from the market because the next day is Thanksgiving and the weekend is coming up. So we still need to reclaim these key support levels for Bitcoin in order to stay in a safe spot when these numbers are coming out. Right, guys, I see a few of you are joining right now. Really cool to see that the stream is finally picking up, while the first few I've been speaking to myself, basically. But of course, yeah, happy to see you guys here. I can't see what's going on X, but warm welcome to all you guys, especially if you're new to the channel. Consider joining us here in Team Crypto and Hype by hitting the subscribe button and all the good stuff. And if you really want to help me out with the algo, smash up that like button right now. Now, guys, let's see what else we got to cover here before we get into the charts. Of course, we have to check Polymarket after the numbers drop right now. This morning, it was an 83% chance for rate cuts in December. Now it's up to 86%. Of course, if more positive numbers start rolling out in these dates, in the next couple of days really, then we can expect the odds to continue going up, and then we have a huge bullish month potentially ahead of us in December. Of course, we know that the Fed already announced that quantitative easing will start, that the printers will be turned on, that they will start buying assets again, and that is usually very good for risk assets. And of course, this has been the case this time around, that we been actually pumping through quantitative tightening, which is normally not the case, because Bitcoin usually is a huge indicator for global liquidity. And guys, I will get into the global liquidity charts and everything in the next coming days. My current schedule right now is Sunday to Thursday. We're taking Friday and Saturday off, and Friday I'm actually dropping a special video for you guys where I will be talking about my strategy, how I increase my position size, multiply my position size during bear markets when it comes to Bitcoin and also altcoins. So keep your eyes out for that and activate that notification bell so you don't miss it. Now, guys, let's get into the charts and see what the key levels are here that we really need to hold now to continue now on this current rally where we're trying to flip bullish, of course, on the smaller time frames. I see a bunch of you guys here in the chat right now. Hello from Malaysia. Nice to see you, man. And yeah, guys, get down there, smash the like button, drop me some comments, and I will get back to them towards the end of the stream and answer your questions. So let's get into the charts and see exactly what's happening here. Let me just get over to the 4-hourly chart. That's the important one that we've been watching here for this potential trend reversal. So of course, I've been talking about this setup here over the last few days. What we see right now is an underside test, or what we saw yesterday was an underside test of the 50 EMA. 50 EMA obviously is the exact same thing as the 200 EMA on the hourly chart, and very similar to the 8 EMA on the daily chart. So in itself, a strong cluster as far as resistance goes, but then that comes here also in alignment with the prior range lows, which of course we want to take over to turn previous support back into support, which now is strong resistance. And if we retrace here this last part of the downtrend here, right, from that prior high to the current low, then we see that we just closed below the 61.8 and also a individual third touch point now on that dynamic resistance line here. So this is the absolute spot that we want to crack right now to reclaim support above us, but then to really flip bullish here on the 4-hourly chart. By definition, we of course need to reverse the structure by breaking out of this bearish structure where we've been printing lower lows and lower highs here all the way since the top, right? And we really want to take out the prior high in this downtrend to get an official trend reversal here. And for that, we need to start closing back above 92,500 bucks, confirm above there, have volume confirmation and all that good stuff. And then we can expect an underside test of the daily levels, right? And there's of course very strong resistance in the $100,000 range. And that is going to be massive. If we get there and can flip that, then of course there's potential that we do something that we've never done before, that we reclaim the 50-week SMA as support. So let's check out the daily chart right now, see what there needs to be done right here. We saw that, to go back quickly before I do, we need to reclaim here $88,800. That's basically the line in the sand that we need to cross in order to confirm support here first of all, and then once again 92,500 on a 4-hourly closing basis is what we need to crack here to continue upwards, to test the underside on the daily chart then, and then to potentially flip bullish there again. So let's check it out here. You can see, guys, this is the underside that I'm talking about here. This is where the 50 EMA lines up, the prior range lows here on a closing basis, and then also from this downtrend retracement here, the 78.6 on the Fibonacci retracement. And then the key level where we would flip bullish here again on the daily chart is right here at the top, 106,000. That's the prior high in this downtrend. We want to get back above that. And there's also, of course, one key indicator that we always want to reclaim to flip bullish, to officially be bullish on a time frame, back above the 200 EMA here. So very, very strong resistance cluster in the $106,000 range, and then below there here in the $101,000 range. That's the key area that we want to reclaim here. 50 EMA, prior range lows, and the 78.6 on the Fibonacci retracement. On the way up there, we will meet resistance here in the area around $94,000 to $95,000, where we can see that we have the dynamic trend line here, that gave us prior support, therefore now resistance, lining up here also with the 50 on the same Fibonacci retracement and the 21 EMA here. So could face some resistance here. Potentially a TP2 strategy is in order here to take profits up here and then on the underside. And then if we flip bullish here above $106,000, then of course our targets become the prior all-time highs and the 8-year resistance again, where we continuously stopped and got rejected this cycle once again. 2021, 2017, and now once again this has been the major resistance. I see here Josh is in the chat right now. He's asking which of all the data release is the most important. Of course, it's a bit of a cluster right now. We're getting so much data right now after getting nothing for the last 50, almost 2 months, right? We had the whole September, the whole October, no data, and therefore we're catching up right now. The Fed really needs to get some indication of what's going on in the markets to know whether they can cut rates. So everything in combination is really important. Of course, the notes that are being sold right now, these are really important. The 5 years today, then the 7 years tomorrow, then the PCE data tomorrow. Very, very interesting for the Fed as well, for monetary decisions. So we got to keep our eyes on everything. And it's a bit of a combo right now to get a positive image of the economy, or potentially even a negative one, to put pressure on the Fed in order to cut rates. This is really what we're looking for right now. So I can't really tell you what the most important thing is. Of course, the key event that's coming out is on December 10th, when we see the rate decision, and that then will have, of course, the biggest impact on the market if we then get the 25 basis points that we're currently anticipating. If it's not the case, if the Fed decides to hold the rates, then that's of course a big shit sandwich. And then we can see some more downside, even though quantitative easing is going on. I explained you guys before, it's a thing where when we switch over from quantitative tightening over to quantitative easing, it's not that we can't expect that immediately will be a catalyst for the market and everything will go crazy, right? We have to see that that's just the start of a new era, if you will, right? Usually during quantitative easing, when the printers are on, when liquidity is going crazy, Bitcoin is a huge liquidity sponge, right? When the printers are on, that money is flowing into Bitcoin like no other. So that is a good thing in the medium to long term. But the first thing we really need to see is confidence from the Fed that they actually continue to cut rates, not only in December, but then also in the following month, to give the retail as well favorable conditions to buy risk assets and to borrow money to buy assets. So this is what we're looking for right now. And yeah, guys, these are the key levels here on those time frames, and we can see also, of course, that there's also some strong confluence coming from higher time frames as far as support goes right now. Let me switch over to another chart, actually, there we can see it better. Where do I have it? Here we go. Okay, here we see right now, this is the weekly chart, right? Something we're very familiar with, of course, is that we lost the 50-week SMA. Something that I spoke about in the past a bunch as well is that nothing lasts forever, right? Even in trading, even with a 50-week SMA. I've been speaking about it myself since 2022 when I started making videos here on YouTube, that this is absolutely the key indicator that we need to look out for, not only to identify whether we're in a bull market or bear market, since every time we put in new all-time highs and ended up closing below that indicator, we ended up going down to our bear market lows. So from that perspective, of course, it has a 100% hit rate. Then we have always opportunity. Whenever we lose the 50-week SMA as support in our bull markets, then we usually get an underside test. We have looked at it here multiple times on the channel. We can do it once again here, guys. And there's actually another indicator that I will come to now. So we can see that here, for example, in 2021, we came back down here and then retest after losing the 50-week SMA, came back down here into this supply and demand area here, and then bounced from there, got an underside test of the 50-week SMA, and historically that has been a great opportunity to exit the market in case you missed exiting all your positions prior to that, and to start shorting the market to certain indicators, potentially like the 78.6 of the entire retracement for the entire bull market, or the 200-week SMA. Usually those two are very close to being exactly at the bottom, and very good buy areas. And we saw the same thing back in 2017. Now we see one thing here. We came down to the 100 SMA here on the weekly chart and got a nice bounce from there, then came into the 50-week SMA for an underside test, a rejection, then went down to a bear market lows back in 2021. Potentially we have a very similar setup right now. We can see here that we're getting support from that, in alignment here with the 38.2 on that Fibonacci retracement for the entire bull market, where of course we have looked at the 38.2 levels, taken it from the bear market lows to the current tops here in all these ranges, and we saw that we bounced off the 38.2 every single time in this bull market. That's coming with support here of the 100 SMA, and that we saw in 21 was the moving average that we bounced off to get the underside test of the 50-week SMA. So here we circled the area already. That is a key area to look out for. If we can flip this back into support, then that's of course a very strong indication that we're continuing here in this bull market, getting another test of the 8-year resistance. But on the other hand, it's also a great opportunity to exit any open positions and to exit the market and to start shorting the market. And what I will do on Friday in my videos, I will give you a clear breakdown of how I approach this bull market coming out of the prior bear market, and then how I multiplied my positions, not in the bull market, but during the bear market. It is very similar to real estate. You don't make the money when you sell the property, you make the money when you buy the property. Your purchase price is all that matters, really, if you have the correct exit strategy for the market as well. So we will get deeply into that. I will cover it all for you guys, and then you will have a better idea of how I approach bull markets and bear markets. And that will be a 3-part series, which then will be followed up by some more short-term strategy of how you can trade within those bull markets and bear markets and other stuff, how you can then reinvest those profits into different tiers in your portfolio. So guys, if you're new to the channel and you're interested in that kind of stuff and you want to see how I do my stuff, then make sure you subscribe first of all, and activate that notification bell so you don't miss it. And also, of course, if you have any suggestions or anything, drop that in the comments. I'm more than happy to engage with you guys, and always happy if you guys have any ideas to help me to grow this channel, of course. Right guys, so this is it here basically for the Bitcoin chart today. There's not much else to cover here as far as the levels go. On the 4-hourly chart, it's very clear. Of course, I broke it down in more detail in the last few videos. If you're curious about it, check it out. But these are really the key levels that we need to look out for today. This is exactly what I'm tracking right now, and also the key events that we need to look at. Of course, tomorrow, massive. Let's go check out the data sheet one more time. For those of you who just tuned in, this is a data sheet that I release brand new every Sunday, 4 to 5 times a month, where I always give you the updates of everything that's coming up in the following week as far as macro data to watch. Here we can see this week, of course, we just got the retail sales and the PPI from September. Once again, guys, October data is canceled. Then we have the consumer confidence today, a little bit later, and the GDP, the annualized and core PCE tomorrow. And today, of course, also the US 5-year note auction, and tomorrow the 7-year note auction. Yesterday's numbers came out lower than the previous ones, which was a great sign for demand for those notes, and usually a strong indicator that we're getting favorable monetary policies by the Fed. So let's go back here to the Polymarket. We can see it, the chance of rate cuts is up to 86% now. So overall, pretty favorable conditions for the market right now, if of course everything follows as expected and we get those rate cuts then in December as well, then we can hopefully expect some more bullish price action afterwards. Key levels, guys, still the same thing here. We need to keep our eyes out here for the underside test. First of all, on the smaller time frames on the 4-hourly chart. Then here, of course, then followed here by the daily chart, where the $101,000 area becomes very, very interesting. And then above 106,000 is when we turn full on bull mode and are likely to revisit the prior highs and print new all-time highs. Until then, that's a huge opportunity to also exit the market. So guys, I'll be back tomorrow, and we'll cover everything, all the key events tomorrow as well. I'll go live right before these events start once again. We'll cover the levels, we cover exactly what's going on in the Bitcoin chart and what we need to achieve in order to flip bullish in case we get some more positive data. And then, of course, next day, Thursday, I'll be live as well. It's Thanksgiving, but we want to see exactly what's going on in the markets on a day where we expect low liquidity. Right, guys, that's basically it for me for today. I'm going to wrap it up now. Hope you enjoyed the stream. Once again, if you're new here, consider joining us here. Smash up that subscribe button, that like button. Get down in the comments section and all that good stuff to help me out with the algorithm. And if you're watching over an X, warm welcome to you guys as well. Of course, follow there. This is where you get all my short-term updates around the clock whenever I don't have time to stream or post videos. Right, guys, it was good to have you here. I'm going to wrap it up now. And as always, happy trading and see you soon.